Moved over to the hourly chart for cable. You saw what David was doing on the 10-minute chart, and I know we don't because of time constraints and what have you, it's a bit difficult to do the slightly slower charts, but the hourly chart for cable is really interesting. And it's interesting from the perspective of, I said about levels and flow. And if you were thinking, well, okay, you know, what's been going on with cable this morning? Is it going to carry on lower? Have you missed that, as it were? We're going to be coming into the New York session, so we've had the trend lower. Looks like it is going to break lower, but no, that's not your tactic, as it were. You actually want to perhaps use a slower time frame and maybe use important levels to perhaps think of where it may reverse. And this is where the hourly chart really may help, and also using, we've got the Camarilla. This, I'm only looking at price-based levels at the moment. Now these levels for for cable and all the other pairs as well on the hourly chart are actually valid for the rest of this week. So it's quite interesting to see. It tells you a number of things. First of all, this week, the R3, because there are the two most important levels on Camarilla, is the third and the fourth. We've actually developed this indicator to give us 6 levels. What tends to happen on the R3 is price will pretty much all the time will pause there. Will it reverse? And this is the hourly chart. If it reverses, then sometimes you can have an opportunity. If you are a scalping trader, you know, you're not going to be in for very long, because the values on the faster time frames are actually calculated every day. Every time there's rollover, there's a fresh set of calculations. So it's interesting to look at multiple time frames, so you see what the levels are on the slower time frame. The hourly levels are also applicable right up to the daily chart, so it's really important level. What it's done this week is, in calculating the fresh levels for the week, you've noticed here it's actually come, and this is why I've crunched up the chart, is how many times has cable tested this particular level, which is the R3, which is at 39, 36, 39. So you can see here, I mean, it goes right back to the 21st of June. Yeah, it had a little break there. We're talking, you know, it picked up the level for this week, but it's also corresponds to this zone, if you like, where the cable has reversed. It hasn't actually managed to break through this level. So it's a level that you could now consider for the rest of this week. And where is it aiming for? The next most, as I said, the third level is the most important level, and see how close we are to this third level. And given that we're moving into New York fairly soon, what is the CSI telling us? Well, you know, the dollar is getting overextended, but as I said, it can stay overextended. But realistically, what would be interesting is to see whether that third level actually holds. And if you go back to the 21st, it actually, obviously it wasn't the third, the S3 at that point, but it was a point at which it actually bounced higher. So not only does it tell you on a longer time frame where the slower time frame, where the current move that we are seeing, I've got it back on the Renko here, which was the pause point that David highlighted on NinjaTrader, as we saw here. It actually coincided with this a volume level here from the volume point of control. Now, what's interesting, the volume point of control is down here, so this price, you could say, is more bearish than bullish. Everything is pressing down on it, and we can see here, in fact, it hit S3. This is on the 5-minute chart. So that of itself would tell us, knowing what we know about the S3, that the chances are it would actually perhaps roll over from there. And in fact, we got a little kiss on the CSI as well, because CSI, what it also does for you, it also helps you to confirm what you're seeing in terms of levels and price hitting levels. What obviously the volume will also tell you there. So you had this candle here with that the amount of volume underneath it. My volume is not going to be identical to Ninja. You can't compare volume profiles across platforms. You do have to, read the volume that you see on the chart in front of you. But what's interesting is you had a very wide-ranging, very widespread up candle, but the volume was it's not fantastic for the range of that candle. Then you have this candle. Yes, you have a wick to the underside of the candle, but look where it is going. This is what we try and stress. You have the price action, you have the volume, but you have to also incorporate it with your candles, your candle patterns, and also what level is it now approaching. And yeah, you had that little bit of it wasn't at overextension, it was moving higher. Then, as I said, we had this 3 attempts to move through the S3. We've had this little kiss. Now we've got this as a divergence. And what the levels now tell you is, where is this going? And this is where your other 2 levels on the Camarilla come into play. And you'll also get the pauses at those particular points as well. But it's the hourly chart which is particularly interesting at the moment, given we are coming to this very important S3. What's also interesting is it looks like the pound has got more to go. It hasn't carried on higher, but the dollar is reaching some kind of extension. So we're not going to get a strong, it's not equally weighted in terms of sort of buying and selling. You are going to get a little bit of an asymmetric push and pull, as it were. But that is where it is definitely interesting to keep an eye on this S3, where it is bounced off there. If it goes through on longer term, we've got the S4 here, that level there, going to our faster time frames. If we're going to get another potential reversal, we've certainly got those 2. Now, once these levels are, they're certainly on the daily and sometimes on the weekly. I think we've had an occasion where all 6 were, because there's been such a strong move on a Monday. They're all taken out. So you think, well, my goodness, they've all gone. What do I do? Well, you go back to using the daily ones, but don't forget, after a strong move, price will come back and possibly retest it. So they are still in play for, if it's blasted through to the top side, then coming back again, they will act as support. Potential areas for reversal back higher, as it were. And as I said, it's having some levels on your chart which will give you these areas. I mean, let's call it, there was more supply there, then we're talking about demand at the bottom. These are just semantics, these are just terms. It's where price is going to reverse, because the buying and the selling is going to swing one way or the other. David's you're going to do Bitcoin, David, to look at Bitcoin. There's a question from Leonardo, about spreads, right? Yeah, I was just going to, I'll pass it over to David as well. My thing is, there are some brokers who offer raw spreads. But you do have to pay a small commission. Can I just say something? There is no such thing as a free lunch in trading. Right? That is the bottom line. Traders out there in stock trading with Webull, Robinhood, and the other apps that are out there don't pay anything. It's free, in inverted commas. No, it's not free, because somewhere along the line, the broker is making money. Now, you can go and read online about how the orders are sold on to the market makers, and it's what you're quoted on your platform. are you getting the best price basically, or is it not so good? There is a number of, but ultimately nothing is free. Whatever they say, somewhere along the line, you will have to pay. You have to make the decision whether you want to pay. Excuse me.
Sorry, Anna's had a coughing fit. She's okay now. Sorry about that. Just to reinforce that, Leonardo, nothing in trading is free. The broker has to eat, like everybody else, and so they will make money. I think what you'll find with free or professed as free accounts is that you'll find, read the small print. That's the first thing I would say. You will tend to find that requirements for margin are much higher, things of that nature. So you will find it buried in there. Just check with your broker and read the small print. But as I say, always remember, nothing is for free. Keith, just to answer your question, I have basically got here, just to tell you what I have here. I'm sitting here. I have an overclocked gaming machine. That's all I'm running at the moment. It is pretty quick. I also have to say that we are Ethernet connected. We are entirely hardwired here from the exchange. So we have fiber broadband into the house, literally physically to the house. The whole house is wired up with Ethernet. So every single PC we have here is hardwired. So you can almost say from the exchange into what you're looking at right now. It's one machine. It's an overclock gaming machine. Cost about, can't remember now. No, it was more than that. It was $2.5 grand, something like that. I've got 3 platforms running here. I have a huge number of workspaces. This is the number of workspaces I have running, all of them with multiple windows, pretty much what you see here. So there's a massive amount of data coming in here. The broadband speed we have here, we are very fortunate, we are blessed. We have, I think it's just we have 900 and something meg download. And the upload speed is pretty rapid as well. So we have 900 megs download and I think it's about 400 or 500 upload. So it's pretty lightning fast. That's what you need to cope with all this sort of data. So as I say, I've got NinjaTrader running. I've got the TradeStation screen running with multiple windows, loads of data coming in, all of that stuff you saw earlier on. And over on the right-hand side, I've got the Trading View. I'll pull that over in a minute, but that's browser-based. But again, I've got decent charts there. If you are, the beauty of Trading View is, of course, you can run it on pretty much any device you care to name. You can run it on Mac, you can run it on mobile, you can have all the indicators, etc., etc. So, Trading View is browser-based, so you can run it on pretty much anything you care to name. In terms of MT45, that is not the case because our indicators require a Windows environment. So if you're going to run them on a Mac, you need to have a Windows environment, which you create. The one we recommend is Parallels. That, of course, will take up additional resources on your Mac. So, just be aware of that, but it'll work perfectly fine. But you've got to have a virtual Windows environment, and you will need a Pucker Windows license as well to run alongside it. And the same applies to TradeStation as well. So that's what I've got running here. So just close out there. I hope that answers that one for you, Keith. This is where we are with the indices. We've got the YM, the NQ, and the ES on the bottom in terms of daily, and up the top there we've got the 5 minutes equivalent. And really, this is just what I was talking about earlier in terms of divergence. This was yesterday's price action, nice widespread up candle. Indecision today, it's all back to nerves about COVID and what have you. Yesterday, what did the YM do? YM sold off. It's going sideways today, and we had the ES, which kind of limped up, very narrow spread. That was sort of limping up along with the NQ. So basically, we had, very bullish on the NQ, mildly bullish on the ES, bearish on the YM, and that's what we're seeing a lot of over the last few months, over the last year or so, 18 months. Typically that sort of price action. Let me very rapidly run through one or two here. I just want to show you in terms of other markets. Copper is interesting. Dr. Copper, it can be associated with the the economy, because copper is such a major part of industrialization and required for so many different processes, manufacturing. Really what I just wanted to show you here, this has been weak for a little while now. We had this big run up, then we had this big signal at the top here, huge wick to the upper body, ton of volume coming in, and there's weakness. You know there's weakness coming in. There has to be at least some sort of semblance of weakness developing. We've gone back down to the VPOC. We've now broken away from the VPOC, and the interesting phase of price action is here. We had a rally and the volume's falling away. It's what I was talking about earlier on in terms of cable. You're constantly benchmarking things. And when you see something like this, we've got volume here, which is lower than the preceding two, but the actual spread of the candle is bigger. So it's kind of inverse to what we were looking at earlier on. So the volume here is lower than it should be if you're benchmarking against previous candles, because it just doesn't look right. I'm just quickly flicking around, see if we can find equivalents. What you're looking at all the time, you're looking for equivalents, sort of equivalent price action. That's probably a bit too big, maybe that one, but the volume there looks lightweight. It doesn't look enough. And in addition to that, you've got falling volume and you've got rising price. So what are you expecting? You're expecting the market to weaken. You're not, it may weaken on the next candle and just collapse, or it goes sideways and down, but at the very least you're not expecting this bullish rally to continue, because for that reason you've got falling volume and rising price. And what you always want to see in a rising market is rising price, and what you want to see in a falling market is also rising volume. So you've got rising price, rising volume in an up market. Rising volume and widening spreads and a falling price will confirm weakness in a downtrend. That's on copper. Oil's been very bullish. We've had some weakness in the last couple of days. Yesterday was a little bit, so we had a little bit of sell-off yesterday, but we've had such a strong run in oil. We write about oil, trade oil. We do you can read about it on the blog post. I won't go into great detail here, but that's where we are right now. And I think we've had off the top of my head, 5 consecutive weeks of draws in inventory at Cushing, which has helped to propel this. We've also got the driving season in full flow in the US, so that also has been a major contributory factor to this bullish trend. Trend monitor there, you can see, has been bright blue throughout that particular phase of price action. Very quickly over onto the metals, gold and silver. I haven't got silver up, but I've got gold up. Pretty much the same. Really, really struggling gold at the moment, which is curious because, if you overlay the inflation debate, then gold should certainly be benefiting in some way, and it isn't at the moment. It's got this bearish tone to it. We're down at the volume point of control, been going sideways, pretty bearish today. There's been some decent moves on that this morning. But if the inflation debate is to be believed, then you would expect that to be reflected in gold, and it's not the case at the moment. Nice volatility trigger coming in there on 3, another one on there, we're there on 15 second. You can see the trend monitor here across the time frames. Doesn't really matter what this is, what chart it is, what market it is. The trend monitor is red, 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 red. Just giving you the confidence to stay in that position, whatever it is you're trading. Let's just go back onto cable, and I'll pull over Trading View very quickly. There, Anna's over her coughing fit. You'll be pleased to know I don't have to get up and do the Heimlich maneuver. Just pull this over. Trading View, wonderful platform. As I said earlier on to Keith, you can, this is browser based. So I'm on Windows here, fine, I'm on a regular PC, but this could be on the Mac, could be on the mobile, doesn't matter. Terrific volume reporting on it as well. It really looks great across the markets, across the instruments. Just wanted to highlight this because Anna mentioned it earlier on. This is on the currency matrix, so I've got 2 versions here. I've got the 5-minute and I've got 5-minute on both. Have I got 5-minute on both? No, sorry, 3-minute on this one and 5-minute on this one. This is what we've added on to this particular indicator. It is only on TradingView at the moment. We will get around to backporting these across onto all the other platforms in due course. It's a huge amount of work all the time we're doing in the development, as you can appreciate, because there's a lot of new stuff coming through, and then we need to go back, tidy up old things, add and upgrade, all sorts of stuff going on the whole time. But this was basically introduced to give a a flavor of when a currency pair was approaching an overbought or oversold condition in terms of the currency matrix. In other words, this value here, in isolation, you learn very quickly on the other platforms, what's high, medium, or low. But you do it by eye. Here, it actually tells you, so we've got 11.5 here, 11.4, and this is telling us the all-time high and the average down the bottom here, 10.6. So we know we're pretty much, the all-time low is 14, so we're a little bit off the all-time low, but certainly, around the average. So it just gives you a flavor. Over here, we're down at 7.5, cable 7.5 on the 3-minute. The all-time low is 16 and the average is 12. So we know straight away we're quite a way off. And you can think of it in exactly the same way as you imagine the currency strength indicator, where you have the 80-20. Those are the kind of guidelines, and this is a similar sort of approach where it gives you just a context, if you will, a benchmark against which to judge where these levels are. Very low here, 6.7, so we're well off the average and way off the all-time high. So in terms of where this has got to travel to, potentially, the dollar Swiss could go a lot higher, get up to these sorts of levels. Potentially cable, it's got more travel in it. So you can think of it as maybe approaching an 80-20 area. It's getting to those regions, but it's not really there yet, and it hasn't really sort of plunged into overbought and oversold per se. So that's the currency matrix. As I say, the development team are working flat out on lots of different things. This is on the currency indices, just to, I like to have this somewhere or the other just to give me a heads up on what's going on. This is the pound, these are all on 5 minutes. So this is pound index. This is the yen index. This is the yen, so consistent. It's not dramatically strong buying, but it is buying. So we're seeing the yen climbing throughout the morning up into the US session. We'll see what happens when we get to 1 o'clock over here and see what we get in terms of the US market. So that's what the yen's been doing. This is the dollar. So the dollar has been, let's just pop that up. There we are. Just pull that over a little bit. We've had a little bit of reversals, but essentially from sort of 7 o'clock this morning, it has been climbing, a little bit of reversals, but it's carrying on up in more dollar buying. And remember what Anna said last week in terms of the CFTC, the shorts, dollar shorts, massive dollar shorts overhang on the CFTC numbers. And they are getting squeezed at the moment with these constant dollar recoveries. And finally over here onto euro. Euro hasn't really done very much this morning. Pull that over a bit, little bit of a rally, but not really going anywhere, going sideways at the moment in terms of euro. It doesn't automatically mean that every euro currency in the complex is going to be moving sideways, because there's always a driving force counter to that particular currency. It just means that in terms of a strong trend, there probably aren't strong trends in terms of euro, because the euro is moving sideways. There might be strong selling of an Aussie or strong buying of a pound or strong selling of a yen or whatever. But in terms of finding those two opposing forces, you're always looking for two currencies which are in direct opposition to one another. So you want one which is rising strongly and one which is falling strongly. Now, speaking of that, click over to this. This is our new, what we've christened the CCTS, the Cryptocurrency Strength Indicator, the CCSI. It looks very similar to we're going to be launching this. I think we might even get this out next week. It looks very similar to the Currency Strength Indicator because it's designed on the same principles, and you would use it in a very similar way. In other words, you would use it in multiple time frames. You are looking for overbought and oversold regions, top and bottom. You are looking for the angle of inclination. In other words, these lines, are they rising strongly? Are they falling strongly? That will be an indication of strength, of momentum in the trend. The difference with this indicator, the two probably primary differences. So you would use it in exactly the same way, but the primary differences are, first of all, that what we're dealing with here are, if you like, the currency pair. It's not that we're dealing where on the CSI, we break it out into the individual currencies. Here we are dealing with the cryptocurrency in total, if you like. It's complete. It's complete in itself. This is Bitcoin, BTC. We've got 7 others up here, but what we've actually done is we've broken out the counter currency of every single cryptocurrency on TradingView, and we've used Tether, which is the USDT, because that theoretically is pegged to the dollar. So essentially what we are looking at here is strength and weakness of these cryptocurrencies against the dollar. In our case, it's against the Tether, and that's why I've got Bitcoin Tether over here. This is on the hourly time frame. The difference also here is that whereas with currencies in the Forex world, you will tend to get a lot of divergence. You will see one currency moving higher, another currency moving slower, lower. That's what gives the strength and momentum to the moves. They will be moving all in different directions. What you will tend to see here is that the cryptocurrency market tends to move en masse. That's not to say that if you're on a 1-minute time frame, you won't see divergence. You'll see one cryptocurrency rising, another one falling. But in essence, this is what you expect to see. You expect to see them moving together because what's driving them is the counter currency, which in this case is Tether, the USDT. The beauty of that is that when you're trading one, if you are seeing them all rising together, it gives you confidence. And you can think of this as very much like a matrix, like the currency matrix in Forex, where you are looking for that flow, the river of sentiment in that case, where you're seeing everyone buying or everyone selling, the yen or the euro or the pound, whatever it is. What you're looking for here in precisely the same way is the river of flow of sentiment towards the cryptocurrency market per se. And if that is the case, then they're all going to be moving in pretty much the same direction. So it's a real, gives you confidence that the one that you are trading is moving along with the others. Works in all time frames from 15 seconds right the way through. Any time frame on Tether, you can put it on 1 second if you wish, moves right the way through all these time frames. The other beauty of this, which is really powerful, is that you can also select your own preferred cryptocurrency, and you can change them in and out. So you can select any of these. These are all available on the TradingView platform, and you can just drop them in and out at will, and you can have your own preferred arrangement. So if the one that you prefer to trade is not there, you can swap it out for one of these and it will appear on the chart, the indicator. And of course, the other beauty of Bitcoin is, and you know, Anna wrote a book about this, it must be 2 years ago now, maybe longer than that, is applying volume to trading and investing cryptocurrencies per se. The principles are identical. It doesn't matter that this is a Bitcoin. It could be gold, it could be an FX, it could be a stock, it doesn't matter. VPA applies in the same way, exactly the same principles, and the indicators work in exactly the same way. We had this big volume increase, volatility trigger, this is on the hour. What are we expecting? Some congestion to build, we get it. The trend monitor, any indicator you care to name will work in exactly the same way with this particular with this particular market. So it is no different to any other. There will always be arguments about, well, is this volume real and blah, 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 and all the rest of it. The fact of the matter is, volume is activity. When you boil it down into its base essence, it is about activity. It is about participation. It is about noise, if you will. One of the analogies we used, I can't remember where, was about someone standing outside a football ground. If there's no noise coming from the football ground, there is no activity. There's nothing much going on. If there's a roar suddenly erupts from the ground, then the person standing outside, they may not know who has scored or who has done what, but the fact of the matter is, there's participation. And that's really all volume is about. So, I get a bit hung up about it when, we have to answer a lot of emails about, volume this and does it, where's it come from, blah, 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 blah. It doesn't matter. It's about participation activity. That's what activity is in Forex. It's about activity and participation. This will be available, sorry, Don, this will be available, I think probably we're working on it flat out this week. I think it will probably be available next week. I have to do some videos. Development guys have got some more debugging to do and testing. I think it'll be rolling out next week. Keep an eye on the website, on the YouTube channels as well, on the lab site too. Price-wise, I can't confirm yet at the moment. The one thing I would say is if you have the full package of TradingView indicators already, you will get this free of charge. It's as simple as that. It's what we always do. We've also got 3 or 4 other indicators in the pipeline. So if you're on the full package, you will get all these indicators free of charge. It's just the way we work. It's just our way of saying thank you to you for investing in the full package with us. I'm going to pass back to, let me pass back to Anna at that point. If you have any questions on this particular indicator or indeed anything else, you can always drop me a line, david@quantumtrading.com or anna@annacooling.com. Where will you find all the bits and pieces? You'll find them here this is where you'll find all the indicators at quantumtrading.com. We have all the platforms, MT45, NinjaTrader 7.8, TradingView, which I've just been through with you, and also TradeStation has now been launched. We've got 2 versions of that. That's the TradeStation 9.5 with interactive brokers as the live feed, and TradeStation 10, which is TradeStation Securities, and they of course incorporate the awesome power of radar screen, which is wonderful. And remember, when you invest with us, there's several things to remember. First of all, you can move your indicators from platform to platform. So if you start with one platform, you perhaps want to move to another platform, that's perfectly fine. We don't charge you for that. We just transfer your indicators across. We have a lot of customers who start perhaps with MT4 or TradingView, then they want to move to TradeStation or NinjaTrader. Perfectly fine, we do that for you, absolutely no charge at all. And finally, if you do, whether you buy one indicator or several, if you upgrade to another package, for example, we will always give you a credit for those indicators. So you never lose out, you never lose your initial investment. We always protect you in that respect. So you'll always receive a full credit. And finally, of course, if you invest in the full package, even more so with TradeStation at the moment, because it's currently at $677, I think off the top of my head. But once those other indicators are developed for the platform, then we will be increasing the price, which will align with the MT45 platform. So it's a great time to invest with TradingView because, as I say, you'll get all those indicators free of charge. You won't be paying for them. So it's not a bad time to invest in that package. But all the other packages, if you invest with a full package, we also give you all future indicators we develop free of charge. It's just our way of saying thank you. Finally, just to give you a heads up on the education program, I've just touched on 1 or 2 aspects of it. Obviously, within the program here, it's called the Complete Forex Trading Program because that's exactly what it is. To say it's comprehensive is a disservice. It is everything you need to know. You have all the modules which cover the psychology, the fundamental analysis, relational analysis, so you'll understand how markets relate to one another in terms of risk, in terms of relationships to bonds, bond yields, how commodities fit into that structure, and of course the actual relationships within markets, how currency pairs relate within the markets themselves. You've got a deep dive into technical analysis, of course, that is VPA. It's all the Wyckoffean principles, it's Wyckoff's 3 laws. And in addition to that, it's how to apply VPA, not just to straightforward analysis, but we teach you how to understand when a trend is coming to a pause point and to identify whether it's actually a reversal in trend, in other words, from primary to primary, or is it simply a pullback? And if there's one thing that you would learn, it is simply that, because that will stop you getting out of trades too early. It's as simple as that. The mechanics of trading, and then there's something like 200 to 300 hours of video, VPA chart examples, how to use the indicators, pulling it all together, topic webinars with Anna and myself, a huge webinar library, and a resources section as well. And of course, all of that is backed up now. We've added the QTE funded Forex program. And the reason we've done it is very simple, because we wanted to give you, our students, and this is only available to students on the program. I'm sorry, it's not available to anyone else. If you're a student on the program, you have the option to join. It's there to give you the opportunity to leverage your knowledge. And it's very simple in the way it works. It's a no risk deal as far as you're concerned, because you are trading our money. It's as simple as that. We give you the opportunity to start with an evaluation account at $5,000, $10,000, or $15,000. Once you've achieved a very achievable target at that level, you've proved to yourself that you have the consistency to trade, you've proved to us you have the consistency to trade, we then multiply it by 4. So if you start with a $15,000 account, we push you up to 60,000, and thereafter we double it. So you go from 60 to 120 to 240, and in pretty much no time at all, you would be up trading $1 and $2 million accounts. It is simple as that. There is no risk to you. There's a one-off fee to pay. That's it. That's your only expense of getting into that particular program, but it's entirely optional. What we've now bolted together, we feel it gives the complete package, if you like, of giving you the opportunity as a student to benefit from your knowledge and prove to yourself that you can trade a large money account at no risk. So that's it. Hope you've enjoyed this particular video. Lots more to come as always. Thanks for watching. See you again soon, and bye for now. Where will you find all the bits and pieces? You'll find them here this is where you'll find all the indicators at quantumtrading.com. We have all the platforms: MT45, NinjaTrader 7.8, TradingView, which I've just been through with you, and also TradeStation has now been launched. We've got 2 versions of that. That's the TradeStation 9.5 with interactive brokers as the live feed, and TradeStation 10, which is TradeStation Securities, and they of course incorporate the awesome power of radar screen, which is wonderful. And remember, when you invest with us, there's several things to remember. First of all, you can move your indicators from platform to platform. So if you start with one platform, you perhaps want to move to another platform, that's perfectly fine. We don't charge you for that. We just transfer your indicators across. We have a lot of customers who start perhaps with MT4 or TradingView, then they want to move to TradeStation or NinjaTrader. Perfectly fine. We do that for you. Absolutely no charge at all. And finally, if you do, whether you buy one indicator or several, if you upgrade to another package, for example, we will always give you a credit for those indicators. So you never lose out. You never lose your initial investment. We always protect you in that respect. So you'll always receive a full credit. And finally, of course, if you invest in the full package, even more so with TradeStation at the moment, because it's currently at $677, I think, off the top of my head. But once those other indicators are developed for the platform, then we will be increasing the price, which will align with the MT45 platform. So it's a great time to invest with TradingView, because as I say, you'll get all those indicators free of charge. You won't be paying for them. So it's not a bad time to invest in that package. But all the other packages, if you invest with a full package, we also give you all future indicators we develop free of charge. It's just our way of saying thank you. Finally, just to give you a heads up on the education program, I've just touched on one or two aspects of it. Obviously, within the program here, it's called the Complete Forex Trading Program because that's exactly what it is. To say it's comprehensive is a disservice. It is everything you need to know. You have all the modules which cover the psychology, the fundamental analysis, relational analysis, so you'll understand how markets relate to one another in terms of risk, in terms of relationships to bonds, bond yields, how commodities fit into that structure, and of course the actual relationships within markets, you know, how currency pairs relate within the markets themselves. You've got a deep dive into technical analysis, of course, that is VPA. It's all the Wyckoffean principles, it's Wyckoff's three laws. And in addition to that, it's how to apply VPA, not just to straightforward analysis, but we teach you how to understand when a trend is coming to a pause point and to identify whether it's actually a reversal in trend, in other words, from primary to primary, or is it simply a pullback? And if there's one thing that you would learn, it is simply that, because that will stop you getting out of trades too early. It's as simple as that. The mechanics of trading, and then there's something like 200 to 300 hours of video, VPA chart examples, how to use the indicators, pulling it all together, topic webinars with Anna and myself, a huge webinar library and a resources section as well. And of course, all of that is backed up now. We've added the QTE funded Forex program. And the reason we've done it is very simple, because we wanted to give you, our students, and this is only available to students on the program. I'm sorry, it's not available to anyone else. If you're a student on the program, you have the option to join. It's there to give you the opportunity to leverage your knowledge. And it's very simple in the way it works. It's a no risk deal as far as you're concerned, because you are trading our money. It's as simple as that. We give you the opportunity to start with an evaluation account at $5,000, $10,000, or $15,000. Once you've achieved a very achievable target at that level, you've proved to yourself that you have the consistency to trade, you've proved to us you have the consistency to trade, we then multiply it by 4. So if you start with a $15,000 account, we push you up to 60,000, and thereafter we double it. So you go from 60 to 120 to 240, and in pretty much no time at all, you would be up trading $1 and $2 million accounts. It is simple as that. There is no risk to you. There's a one-off fee to pay. That's it. That's your only expense of getting into that particular program, but it's entirely optional. What we've now bolted together, we feel it gives the complete package, if you like, of giving you the opportunity as a student to benefit from your knowledge and prove to yourself that you can trade a large money account at no risk. So that's it. Hope you've enjoyed this particular video. Lots more to come as always. Thanks for watching. See you again soon, and bye for now.